welcome to the Trading Bell. My name is Malika Kazia. I'm glad you could make some time for us. Today, as you can see, I'm actually at the headquarters of HF Group, and I'm going to be talking to Group CEO Robert Kibara. Now, when we talk about HF Group that has been in existence since 1965, we think of them as providing property and financial solutions with interests ranging from commercial banking to real estate to insurance and more. So we want to get into this conversation with Mr. Kibara on commercial banking, affordable housing, real estate, and of course, where is HF Group going? So let's get right into it. But before that, you want to find out more about him. So take a look at his profile as I go inside. Robert Kibara is a renowned banker with over 25 years experience and an excellent record of accomplishment in successfully driving change, revenue mobilization, and delivering outstanding business results. He has previously held several leadership positions, including Retail Director at NIC Bank, Executive Director for Retail and Business Banking at National Bank of Kenya, General Manager for Integrated Distribution for Southern Africa, and General Manager for Personal Banking and New Business at Standard Chartered Bank, among other executive positions at Barclays Bank of Kenya. Robert also serves as a director of the Kenya Mortgage Refinance Company. He holds a bachelor's degree in banking and finance from the University of Sunderland in the UK and a postgraduate diploma from the Chartered Institute of Marketing, CIM, UK. All right, thank you so much for joining me today.
Thank you. Thank you for having me.
Okay, so when we talk about the HF Group, and of course you've been at the helm for over a year now, roughly, right? We've seen that the losses have decreased over the past years. We've seen 2018 Q3, that loss of 322 million pre-tax. If we compare it to Q3 2019 at 81 million, we have seen that there's consistent improvement in the numbers. What has been the strategy so far? What are you expecting in this year, in terms of continuing this momentum and your strategy really to keep pushing that further?
Okay. First of all, thank you very much for having me. And the best way to look at that is to look at where are we coming from as an organization. In 2018, we had a difficult year. We had losses over 600 million. Then 2019, we came up with a strategy to turn around the organization. And you're right, I've been here for about a year now. So what we've done over the last year, first of all, is that we got into this massive collections effort to just make sure that we actually cure the non-performing loan book that we had. And 2019, we actually collected 3 billion shillings from that entire loan book. Obviously, that helped a lot to just get cash to the bank and to be able to do other things such as lending and such. The second thing is that we actually built other businesses, what we call engines of growth. So for instance, now we have got SME banking, we have personal banking, we have diaspora banking, we have institutional banking. And these businesses have started bringing in income. If you look at our last year performance, even as at Q3, in terms of non-funded income, we had actually doubled our income. And also, we also worked on the organization of our balance sheet to just make sure that our cost, especially the cost on the funding side, has significantly reduced. Last year, we paid out close to 6 billion shillings to the different lenders, including the bond. And obviously, that brought in a lot of savings, including also efficiency, just improving efficiency, our cost to serve. And we saw that improve every month last year, until such a time when we are saying now, we are not worried about the problems of the past anymore. We are actually thinking about the future now.
So it's clearly been a very strong, bounce back under your leadership. If we look at one of the recent developments as of Jan, we saw that the Housing Finance Development and Investment Limited section was pretty much set to be dissolved. You said that you'll finish the current projects and then not take on further, right? So what really was the biggest factor influencing that particular decision?
Okay, efficiency. Efficiency is the word. If you look at what we are doing on the HFDI side, just to give a bit of background, HFC and HFDI are two subsidiaries of the same organization, HF Group. But you find that HFC built houses, unsold houses, and also does mortgages. HFDI builds houses and sells houses. And if you look at that, you get the sense that there is actually quite a bit of duplication. So you've got these subsidiaries doing a lot of the same. So what we have done is actually then to move assets, certain assets and liabilities of HFDI to HFC. And on that basis also we have moved the operations, the business operations of HFDI to HFC. HFDI will not die. It will actually continue to be there. But the day-to-day operations of it move or have been merged to HFC. That means several things. We've had a lot of capital sitting on HFDI that is primarily idle, that is actually idle. So what we are doing is then we are going to, that capital, you can use it a lot on the HFC side, which is the bank side. And then we create now one uniform unit that actually does what both are doing. But we've also said that we are not going to start to do construction projects ourselves as an organization. We are going to focus on building partnerships with the organizations and institutions that are actually developing those houses, and we are going to focus more on the banking side of things, which we are really, really good at. So that's essentially the change that means. So efficiency, capital optimization, and also just making sure that we do what we are really best equipped to do.
So that's interesting, a lot to unpack there. So before I even get to the affordable housing, topic that I really want to ask you about, you've talked about banking, of course, being the focus. We talk about digitization, and we've seen recently, over the past 2 years or so, that a lot of banks are coming together and forming one larger unit, as we've seen, so that there's that sort of strength that's acquired when you're two. Where do you see that trend, how does it influence the space? And also with the digitization wave, what are you doing to make sure that you're leveraging on that to be on top?
Okay. So first of all, to answer your first question, yes, you are going to see a lot more of that, businesses coming together to build bigger businesses. We don't have immediate plans to do that ourselves. We believe that there is a lot of work we need to do to get ourselves better. We have got a lot of room to be much more efficient and consolidate our businesses so that, first of all, internally we are actually fit for growth. That's the first thing. But turning now to the digital conversation, that will continue to power growth both in the industry and also within HF. If you look at the approach we have taken, we are calling it digital first. Digital first means that all the solutions that we are building are actually, we build the digital version of it first, and then the analog version, if we have to. And that's how come we have come with solutions such as WhatsApp banking. We've got Whiz, which is award-winning. We've got now online banking. We are very active on bots in terms of communications to customers, and even on social media. That will continue to grow. How we see it from where we sit is that there's got about three angles. The first angle is the angle of service. How do you make sure that customers can be able to access products faster, more efficiently? They can be able to self-help themselves. That whole access. And so we are creating opportunities for customers to access the bank wherever they are. And we believe we are leading that space. The second thing that we are doing is to make sure that, for instance, you are able to then not only just provide that service or that service, but also the user experience. That the customer can actually, with the ease of doing business, that you can actually do that in two clicks, and you're able to access your service. For instance, today, you can be able to send an RTGS from here to to another bank in like three clicks, and that's done. You can be able to access services. For instance, you can be able to do what else? On the WhatsApp banking, then, just as you are chatting, you don't have to leave WhatsApp banking, you can actually be able to access it. That user experience is very, very important to us. The final one is communication. That customers can be able to contact us anywhere easily, whether you're on Instagram or on WhatsApp or Facebook, any of the channels, on social media channels, you can actually be able to access us. And we have online real-time conversations with customers. That will continue to get better and better. the one thing that we've done very, very well that has improved things here, at HF is we have digitized a lot of the processes we have. HF has got about 54 processes, 54 journeys. Order a checkbook, order standing order, a card. We have got about 54 of those. And we have digitized the half. And this year we expect to digitize the other half, such that wherever you are, you can access the bank fully as if you are inside a branch.
That's very impressive, actually, looking at the range of things, right? So we've talked about the banking, we've talked about the real estate. Now, when we talk about the mortgage, we had Housing PS Charles Hinga recently talk about the numbers and say close to 25,000 mortgages, is what Kenyans have taken up. But if we compare it to the population of close to 47 million people, it's obviously there's such a gap there. Why do you think that exists to such a severe degree?
Okay, thank you for that. That's a very good question. So there are several things, and most of them are actually structural. First, one of them is that access to the houses themselves. So you've got the houses, but they are actually very, very highly priced. So if you want to buy a house worth, say, 5 million, you have to go very, very far to find it. And so the cost of the house itself is a deterrent, not just because of the price, but also the location. If you're going to spend 3 hours in the morning getting to work, then you can as well just rent a house nearby. Yes. That's number one. The second thing is also the cost in terms of the interest rates. Interest rates have been primarily high for a mortgage, and also we've not had that long-term funding, meaning that you can actually have rates fluctuating over the life of a mortgage. So if you take a 15-year mortgage, then that actually fluctuates. That obviously has discouraged many people from taking the mortgages, and also the processes. Both in terms of the cost, the closing cost, and just how painful it is to actually get a house. So the government has actually made some progress in actually solving that. For instance, Kenya Mortgage Finance Company is going to significantly reduce that. And it's actually moving on well. In a short while, we should see that moving. That will lower the cost. And also will provide long-term funding that is actually on a fixed rate, which is very, very helpful. The second thing is that there is a lot of projects now coming up in the affordable space. There is the government ones, such as Park Road, but there is a lot of, I know about probably 10,000 houses that are coming up now in the affordable space, in projects that HF is actually collaborating with the partners. So you'll actually see the unit costs actually come down. And then institutions like ourselves are every day working on the efficiency to reduce the pain of owning a house, so that we have created now what we are calling a one-stop shop. When you come into HF, you can access the lawyers, the valuers, everyone you need to actually be able to get your house, so that process becomes easy, fast, and painless. That's really what we are doing.